consider this your Wall Street to English dictionary for understanding the year 2021. Let the inflation roll until these people find work. That's him. It's not too late to sell the more egregiously expensive stocks if you want to.
Hey everyone, Simon Says Money here. Welcome back to another video. Today I'll be looking at some opinions from Ray Dalio, Cathie Wood, and Harry Dent, and seeing if there's a stock market crash coming up, or is it just a small correction? We'll go into more details in that later. Don't forget to like and subscribe and turn on that bell notifications. I make videos on the stock market, investing, and hopefully we together can achieve financial freedom. As a disclaimer, I'm not a financial advisor or CPA. Please use your own investment decision. This is for education and entertainment purposes only. Now without further ado, let's get on to this video. So far on February 24th, 2021, the Dow Jones is up 1.3%. S&P 500 up 1.11% and the Nasdaq up 0.83%. So we are recovering from yesterday's fall. I believe that yesterday's fall kicked out a lot of retail investors because some have a trailing stop loss of, let's say, 8 to 10%, so they might have gotten out of their positions. Tesla yesterday, a notable company, was hit hard. It's been going down the past 3 days. Apple also down in a downtrend the past couple days, as well as the QQQ, which is the Nasdaq. So huge down movement. So we can see that the tech stocks were heavily hit yesterday, and because Cathie Wood's ARK ETFs are focused on tech stock, as Cathie Wood states, we invest solely in disruptive innovation. And particularly Tesla was down a lot. ARK ETFs were also down significantly. We can see that ARK was down 5%, 5.7%, ARK W 5.2%, ARK G 5.3%, ARK F 4.3%, and ARK Q down 3.6% on February 23rd, yesterday. Cathie Wood also bought a ton more Tesla shares, and Tuesday's sell-off possibly sparking a turnaround. Cathie Wood's action is better than any words. No bubbles, no bubbles, no bubbles. Let's invest in more of these tech companies, and she stated that Tesla is not just a car company, it's a data company, a ride-hailing company, a high-tech company in one word. A disruptive, innovative company. Don't be afraid of investing in it. I bought Tesla stocks. I sold some other stocks in which I have less confidence than Tesla, so I could buy some more of Tesla shares. I believe that Tesla at $600 or even $700 is a golden opportunity to buy, because when Tesla was admitted into the S&P 500 on December 21st, 2020, Tesla's share price was about $650. Now Tesla has been kind of going down, consolidating sideways, but this is a perfect time, perfect opportunity to get more Tesla shares if you would like. While there are all kinds of explanations why the stock market, especially the Nasdaq, was down during the last 5 days, including these 3 points. The bond yields are up so that capitals are flowing into the bond market. Powell was testifying at Congress. Whatever he says over there will shake the stock market. Tech stocks have been going up during the last 12 months, and due to the pandemic, the traditional and cyclical companies were ignored a bit and down a lot. Now it looks like the pandemic is almost over. Capitals are redirected to traditional companies such as airlines, cruises, and etc. Since people are talking about the stock market bubble, I would like to present some interesting opinions by some other famous investors. First, Harry Dent. He has published a few best-selling books, including The Great Depression Ahead. He is famous because he successfully predicted the Japanese stock market collapse in 1989. Recently, Harry Dent has been talking about the collapse of the US stock market. Let's watch this short clip from YouTube. This YouTube video is from Stransberry Research, posted on February 8th, 2021, and it has over 450,000 views already.
Economic recovery has run its course, and we're about to get hit hard with a 40% correction in stocks in April. My guest today is the best-selling author of various books, including his latest, 0 Hour. He is the founder of HS Dent. Please welcome to the show Harry Dent of harrydent.com. Harry, always good to be with you.
Yeah, nice to be back, Daniela.
Yeah, nice to see you, although you're not bringing a lot of good news here. 40% correction in stocks coming in April. Let's talk about your latest forecast.
Well, we've been in a slowdown in the economy since 2007.
We know that there are many people predicting the stock market bull or bear, but not like Harry Dent, who predicts so bravely in terms of index and timing, a kind of exaggeration. But I searched Harry Dent's credentials and found that his previous predictions were not very good. Maybe Harry Dent's exaggerating talk about the stock market is to sell his book. But still, we need to listen to the voices of different people, so we are cautious in investing. As I said earlier, Dent successfully predicted the Japanese stock market collapse, but was wrong in 3 other areas: the US stock market in 2000, the US stock market in 2013, and the stock market in 2016. Let's take a look at some successful investors who talk about the current stock market. We all know Ray Dalio, known by Wall Street as investment guru or hedge fund godfather. The compounded return of his hedge funds about 20% annually in average for the last 20 years. Although during the past couple years, Bridgewater's performance has been so-so. Especially last year during the pandemic, Ray Dalio bet wrongly, losing more than $100 million. But performance in 1 or 2 years does not mean much. Like Warren Buffett's poor performance for the last few years, but he is still one of the richest on the planet. His annual shareholders meetings are still considered to be a religious gathering like Mecca. 2 weeks ago, Ray Dalio published an article on LinkedIn, and I am subscribed to him, and this came up on my home feed. The title was, "Are We in a Stock Market Bubble?" I found that it is very interesting and I would like to share it with you. Mr. Ray Dalio has seen a lot of bubbles in his 46-year-long investment, so he knows what a stock market bubble looks like. Ray Dalio measures the stock bubble with the following 6 measures. How high are prices relative to traditional measures? We talked about this a few minutes ago. Valuation of tech companies seems to be a bit high as compared to traditional companies. Are prices discounting unsustainable conditions? Number 3, how many new buyers have entered the market? This one is very interesting. Just look at how many people, especially young people, open an account on Robinhood, Webull, TD Ameritrade, M1 Finance. Most of them have no investing experience, but a decent portion of these people have made decent returns during the last 2 to 3 years because of the hot stock market. We will be watching a brief video on this topic in a few seconds. Number 4, how broadly bullish is the sentiment? I believe that the current sentiment is very bullish. Just look at the postings on Facebook, Twitter, Reddit, and all the rest of social media. Number 5, are purchases being financed by high leverage? This is very risky because some of the inexperienced retail investors use high margin to invest in high risk stocks. And number 6, have buyers made exceptionally extended forward purchases to speculate or protect themselves against the future price gains? Let's watch a video that Ray Dalio gave at a TED Talk show.
And I put it in the stock market. And that was just because the stock market was hot at the time. And the first company I bought was a company by the name of Northeast Airlines. Northeast Airlines was the only company I heard of that was selling for less than $5 a share. And I figured I could buy more shares, and if it went up, I'd make more money. So that was a dumb strategy, right? But I tripled my money. I tripled my money because I got lucky.
Did your investment get double or triple return during the last 3 months, 6 months? Or was it because of your knowledge, your skills, your experience, or your luck? Let's ask this question to ourselves very honestly. Mr. Ray Dalio created the below matrix showing each of the measures. We can see that the 2000.com bubble, he gave all of the 6 measures bubble. While in 2007, prior to the financial crisis, only 2 measures marked as bubble. And in today's overall stock market, he believed there are no bubbles, only some frothy. But for the tech companies, Ray Dalio believes that there are bubbles in these 3 measures: new buyers, bullish sentiment, and high margin. I would agree because I am new in the stock market. I am extremely optimistic towards the stock market, and I am not using margin, but I am sure many of the viewers are using margin a lot. As per Mr. Ray Dalio, the aggregate bubble gouge is around the 77th percentile today for the US stock market overall. In the bubble of 2000 and the bubble of 1929, this aggregate gouge had a 100th percentile reading. Ray Dalio also drew 2 curves, one for the bubble companies, which give a return of a stunning 350% since 2020, while for the traditional companies, only about 30% of return. I assume that Tesla is in the group of the bubble companies. The current reading on the price gouge for US equities is around the 82nd percentile, shy of what we saw in the 1929 and 2000 bubbles. How many new buyers have entered the market? A rush of new entrants attracted by rising prices is often indicative of a bubble. That is because they are typically entering the market because it is hot and because they are unsophisticated. This was the case in both the 1929 and 2000 equity bubble. This gouge has reached the 95th percentile recently due to the flood of new retail investors into the most popular stocks, which by other measures also appear to be in a bubble. How broadly bullish is the sentiment? The more bullish the sentiment, the more people have already invested, so the less likely they will invest more and more likely that they will sell. Ray Dalio gives this market sentiment gouge around the 85th percentile. Okay, let's come back to this table. According to Mr. Ray Dalio, there is some degree of bubbles, especially in the tech stocks, but overall the stock market is still growing, at least for now, and for the foreseeable future, let's say 6 months or 1 year. Maybe we should diversify our portfolio a bit, invest some portion of our money in the traditional stock, such as Walmart, Costco, Home Depot, airlines, cruise, infrastructure companies like Eaton. Okay, I believe that Harry Dent's prediction is a joke. Cathie Wood's opinion, continue to invest in disruptive, innovative companies, invest into the leaders, like Elon Musk is a great leader in the Tesla, the EV and space industry at the moment. Ray Dalio, yes, some bubbles, but still okay, and need to rebalance a bit our investment, so make sure we are managing our risk and diversifying properly. Let's talk a bit about Bitcoin, which has been hot recently. The past few days, Bitcoin got hit because this article, Yellen sounds warning about extremely inefficient Bitcoin. Elon Musk also stated that BTC and ETH do seem high, LOL. But the largest Bitcoin holder, MicroStrategy, buys more than $1 billion worth of Bitcoin, adding to massive holdings. MicroStrategy announced it has bought over $1 billion worth of Bitcoin. The purchase of 19,452 Bitcoins put the company's total holdings of the digital token at 90,531. MicroStrategy said the average purchase price of all its Bitcoin purchases is $23,985 per digital token. We can see right now, if we go to the chart, Bitcoin is currently trading at 48,692, and this is right before the market closed on February 24th. My chart presented in my previous video needs to be updated. MicroStrategy added another 20,000 Bitcoins, which leads to the fact that MicroStrategy is definitely the #1 Bitcoin holder. Tesla is there. Jack Dorsey Square said Tuesday that it had bought $170 million worth of the cryptocurrency. Based on my reading and research, I believe that crypto has a bright future, and I believe that either investing in Bitcoin or Ethereum directly or investing in the ticker symbol MARA and RIOT, those are blockchain stocks, as I presented in my previous video. Thank you so much for watching this video. I hope you guys got a chance to learn what 3 key investors said about the stock market crash: Harry Dent, Ray Dalio, and Cathie Wood. Let me know in the comments what your opinions on the upcoming stock market crash and what are you doing in your portfolio to get ready for that. Again, thanks so much for watching this video, and I'll see you guys in the next one.